back to the final hour. It is 3 p.m. Eastern Time, April 30th, end of the month. Some pretty wild activity this morning. We were down about 2% from the open, pushing down. Market snapped back pretty aggressively around the 10 o'clock news, which was core CPI this morning, or of course PCE this morning. So negative GDP, market kind of shrugged it off. We're still red on the day, but we fought the good fight getting back towards the gap. I do have some 0DT trades to close out in the next hour. So I want to walk through those, see how we're doing. Take a look at some earnings plays, added some service trades on my newsbreakers course. Taking a small loss today on, looks like SPY for the little butterfly spread is upside down. And I've got a trade that's closed out, the $2 debit closed it out for 60 cents credit. So I end up taking a loss on that one. So a couple trades to watch. New trades in for newsbreakers. That was Meta, Microsoft. I think I have one or two more trades in there. Let me confirm. Meta, Microsoft, and Hood for Robin Hood. Let's go up to that. So today is the 30th, going out to the 9th. Okay. All right. So Meta, Microsoft, Hood, new trades on newsbreakers. Waterfall, we closed out some trades this week for winners. Daily profit play. That would be 1, 2, 3 trades, 4 trades today. If I close them all out, we had one early winner this morning, 3 more trades running into the close. See if we can get those to hold. So let's go ahead, say hi, hello, happy Wednesday, and let's dive into the charts. So here is what the day looked like. So gap down. News at 8:30 this morning did push the futures market. You can see here. Here's ES at the 8:30 candle. That would be right when your US GDP announcement came in. So the market was down, a little follow through, and then pivoted at 10 o'clock to come right back up and fill the gap. We were down below the session VWAP in the morning, came right back to it and through it, and we actually came back to the weekly VWAP today. Still, we have Max 7 tomorrow. I mean, all in all, the day is relatively calm to very close to where we started. I mean, if we look at opening bell prices, we gapped lower, so the news is happening during this window. And we open here, push lower, push back up. Right now, we are just a few points away from where we started the day. So we still end up grabbing some winners on daily profit play, but the old classic daily profit play would have worked just fine by around 10 to 10:30 a.m. That would have been a nice little winner. I just didn't know how reactive the market was going to be to negative GDP. We have non-farm on Friday, so things get very interesting coming into this week as we kick off a new month. Where we are sitting going into the S&P. So this is what I'm watching for the close. I have a broken wing butterfly up here. I have bear call spreads up here. And I also have a butterfly spread up here. So to repeat that, I want price to stay below this blue line. I have a butterfly spread that's a trap around 55.65. So potentially a broken wing butterfly that's a trap. As long as price stays below 55.65, I pull in the credit there for 75 cents. I have 2 bear call spreads for $1. So as long as we stay below, let's say I'll type it up here. So if we're less than 55.60, then I have $1 on my credit spreads, and I have 75 cents on my broken wing butterfly. If we go 55.60 to 55.65, then I potentially have $1 on my. I'd have $1 on my bear call spread, and I would potentially have a profit trap on the broken wing butterfly. So this could be $1 plus 75 cents. And for every dollar above 55.60, 61 is $100, 62 is $100, or 62 is $200, $300, $400, potentially up to, I'd say, $1 to $5 bonus. Okay. And my risk is if we're greater than 55.85 in the next 55 minutes, if we're greater than 55.85, I do have a butterfly spread with a 5,600 pin price. which may or may not get hit. But I mean, I don't know if price is going to go ballistic and rally another 80 points into the close. We might just kind of hang out here. We've had a pretty big P&L swing percentage-wise intraday, a lot of points, a lot of percentages over, 2% swing down, back up 1+%. So intraday, that's a lot going on. Okay. What's up, Dolly? How are you? Jan, nice to see you. Christian, nice to see you. Sam's in the house. Okay. So chart alarm is set at 55.65 for my broken wing. Call spread starts at 55.70. 5600 is my pin call. It's my pin call fly that I don't really need. I'm going to throw that trade away if it doesn't. I mean, if it's worthless, that's fine. I'm wasting $30 on it, but it potentially pays $1,400 if we get close to 55.90 to 5600. That would pay out pretty well towards the end of the day. Only 54 minutes left. Probability wise on the day, option chain looks like this. So here is the expected move just based on option prices for the next 54 minutes. We've got maybe a plus minus of $17 and change, unless there's some wild end of month volatility that pushes us up, 40 points or so. Then I'm going to deal with some risk, but I have some profit traps with that broken wing butterfly. It looks like a lot of trades. It's a broken wing butterfly, 2 call spreads, and a butterfly spread. So this is what it looks like on my platform. There's my broken wing, up around 55%. Looking to close this out at full profit by the end of the day. Bear call spread looking for full profit. Bear call spread looking for full profit. And there's my butterfly that most likely could be a full loss, which is okay. That's a throwaway trade if I don't need it. I just want to see price stable of 55.60 for the day. Okay. And then we have Mag 7 today. It's, I believe today is Meta Microsoft aftermarket. Let me go into my trades here. There it is. So here's today after market, Microsoft, Meta, Robinhood. So I have trades on all of these. I did look at Eli Lilly. I did look at Roblox. I did look at Reddit. I did not look at Amazon, Apple, but I will tomorrow. I will look at those for earnings tomorrow. I'll probably take those out to the 5/9 expiration. Depends on how they price out. I think they're going to be fairly sensitive, but I'm just going to crunch numbers like I always do and see what looks good. Reddit didn't price out well enough. McDonald's didn't price out well enough. MasterCard didn't price out well enough. Shake Shack didn't price out well enough. Qualcomm didn't price out well enough. I probably ran through like 20 trades today, and I found 3 that I liked. Eli Lilly didn't price out well enough. Roblox didn't price out well enough. So, yeah. So I'll take a look at, I didn't get a chance to crunch Amazon, Apple, but I'll look at those tomorrow since their earnings are going to be Thursday. Airbnb, I'll look at those as well. So I still want to take in maybe the calculations on those 3 trades tomorrow, see if I can throw another trade out for the 5/9 or 5/16 expiration. Okay, so going to keep an eye on this workspace. Chart alarms are set. I still have a 540 SPY trade today. That might be worthless. It was a small debit, like 25 or 30 cents. If I lose, it's no big deal. I'm going to take a tiny loss on that one. But it was a hedge on the day. I mean, basically, I got faked out twice with the intraday volatility. I mean, down here, everything was lighting up to 540. And yesterday, everything was lighting up towards 5,600. So with that gap lower, that one went out of the window. And with the push down today with no follow through, that one was out of the window. So here we are just right back in the middle, which is why I thought for today's screenshot, we're kind of in no man's land. Everyone's expecting all this wild and crazy volatility. I don't know what it's going to take to kind of turn this market over. But I think we could all agree that there is plenty of resistance ahead. It just depends on, is there enough to start increasing volatility, starting to see the VIX spike higher? Are we going to see earnings pricing? Consensus-wise, like earnings aren't terrible this quarter. But a lot of the earnings aren't necessarily pricing in nor affected by the current trade war that we're in. So, I think that the markets might just kind of fumble through the next maybe month or so. We kind of cleared out all the drama from February with the decline. March and April with this decline, seasonality wise, we did get a bit of a seasonal kick. Plus I'm really calling that like the Trump and admin put, just because government saw the bond market essentially break and they backpedaled quick, and all of a sudden we did a 90-day pause. So I don't think the the near term pain is really the play for the current administration. I think there's going to be some backpedaling, which there is. I think the whole trade war hinges on whether the U.S. and China can do something collectively, and I don't know. So, have you looked at yield curve? Yep, I talked about that quite a bit this morning, Ryan. I looked at the 10 and the 2, the 10 and the 3 month. I mean, we've been disinverted for a while. The 10 to 3 month is back to the zero line. The 10 and 2 years been disinverted now for several months. We're way above the zero line. Again, the timing indicator is this. I mean, I know going back 50 years, an inverted yield curve, or not the inverted yield curve, but a disinverted yield curve is typically a 12 to 24 month window for a recession. That's a big window, right? I mean, could we have a melt up to all-time highs? We could, and then we can hit another asset bubble, and this becomes a top, and all of a sudden our bottom is going to be back down to fresh lows. And this is a very challenging pattern, but I would be ready for something like this, like a broadening pattern, because we did the same thing back in 2018. If you look back to 2018 to COVID times, here is a bit of that pattern play out. So we went sideways here from 2018's top into 2019's melt up, right? So there's 2018 drop, melted all the way back up to the highs, dropped further, melted all the way up here, melted down further, connect those lows. That's a COVID low, right? It really was support, support, support. It's crazy how you connect the dots there. And then you start getting to, this level. It's like the market did overstretch before we had the COVID crash. But I mean, everything seems like we go up into a bubble and then we break, and then we go up into a bubble and then we break. If we're lucky, we're making higher lows. But here we are just, melting up through 2021, 22. 2022 was the reset there, some deleveraging. And here we go again, another bubble, and we had a nice little crack this year at 20+% off the all-time highs. So, I look at it this way: connecting the COVID low to the 2022 low to this April low. This to me is where the bull market is going to be safe. Below 4,800 is not safe. Like, nothing good is coming below 4,800. I've said that now for several weeks. Like, once we put in that low on April 7th, ripped up on April 9th, I think there's a meaningful level there that I don't know. There's probably going to be some jawboning if we come back and revisit that. Okay, I think that's a bear trap area. If we do come back to revisit that, I could see a higher low forming. I could see a retest of the lows, but a fake out and a bear trap opportunity, so you can get long there with some very low risk and high reward. But I just don't know, when we're sitting right in the middle, what's next? Are we going to melt up more? Are we going to revisit lows? And I don't know. I would say, let me take a look at prices right now. If I go SPX, I'm just going to go out like 30 to 45 days. There's not a ton of premium that we're seeing on, IV rank is relatively high compared to, normal standards. But from what we saw, it's like I made a lot of profit in the last 30 days with an IV rank of 40, 45, 50, 60 when the VIX was at 40, 50, 60 when it peaked. I mean, I sold so much premium that it was pretty rewarding. I mean, I fought through a lot of this and ended up getting a lot of my accounts into double digits here for positive gains of anywhere between 12 to 15%. I mean, it was scary. Obviously, when I'm selling puts and I'm exposed, I've lowered my beta weighted delta quite a bit. I was up to like 5,000. Now it's down to 2,600. I'm still, a little bit biased. I think that longer term, I'm still taking lots of ratio spreads, and I'm taking like very, safe probability trades. But I have a tilt to my portfolio because I am long. Like, I'm selling puts. That's a positive delta position. So anyway, point is, I've added a bunch of cash to my buying power. I've lowered my beta weighted delta, so that way I'm not as correlated to the S&P. I've added a lot of diversification, which includes gold, Bitcoin, silver, Japanese yen. I got in a trade for healthcare this week, so XLV. Got in a trade for XLE. Johnson & Johnson have some pharma. Pfizer have some pharma. KO, which is Coca-Cola. MO for Altria. Some dividend plays. I mean, I'm trying to mix it up a little bit where it's not just all index trades and high beta freaking tech stocks. So I trimmed a lot of Nvidia this week. I trimmed a lot of Google this week. I trimmed Microsoft. I just have very basic trades running right now, and I'm happy I've got a lot of cash to deploy when I think it's appropriate. So anyway, does this make sense? Type in a wire. Yes, this makes sense. If we're talking, connect the dots here. This is COVID's low to 2022 bear market to this April low. If we can maintain this as a low, that's a good sign, and the bulls can possibly push up here, pull back again, form a higher low, then get back to highs again. If we have a trading pattern, I'd certainly consider taking the trade. Okay, I think a bear trap would be even better because I mean, the downside right now with the daily chart is we are below the 200 moving average, and we're not showing all of the evidence of the bulls having control yet. And so I'm not calling tops here, but if we start to see this market rolling over in let's say the next 3 to 4 weeks, so this thing tops out between 57, 5,800 and starts to roll over, well, we could obviously come back down to fill some gaps, right? We can come back and swing at some lows, and we could possibly come back all the way to these lows. Now, what would be the catalysts? What would be the fundamental, landscape to see all that happen? I have no idea. I don't know. I mean, we just had Trump say for his first 100 days of presidency that he's blaming Biden for the first quarter and the stock performance. I'm pretty sure that a trade war happened on Trump, but hey, that's what the guy does. There's very little accountability for bad things. There's all credit received and demanded for good things. Right now, we're clawing back. I mean, Trump can say, "Look, I tweeted and the market responded." you know. So, point is, I mean, I think it's a challenge to get back to all-time highs, but the bears might be a little bit overcooked. The bears might be a little bit. I mean, premium hasn't really settled down, so it's almost a little expensive to be hedging at this point. But we also could just spend time going nowhere because everyone thinks it's going to be just nonstop direction. It's like, look, a high to low and a pullback here. We could spend some time doing a lot of nothing, right? So let me actually look at a trade right now. I don't know if I can go out far enough and high enough to get the trade that I want. Because what I'm contemplating is for the next like 40 to 60 days, could I actually sell a call up here and sell a put down here and take in some credit? Let me see if I can do this on the SPY. I don't want to own anything, but I'm just looking at just a straight up option trade. So if I did a strangle, and I had like 40,000 in buying power. What the? Oh, it's all tied up in today's trades. Never mind. It's all today's trades. So those close out, I'll probably bump this buying power back up to $20,000+. Let me go out SPY. Let's look at, see how far out I have to go. So the highs on the SPY, 613, and then the lows around 482. So could I out 60 days, end of quarter, before we have this this tariff window in July expire? If I went out 60 days, could I sell a call that's high enough? And the answer is, I guess, like 612, 613 is like, I'm not making a lot of money on this trade. If I did this by deltas, could I do like a 10 delta? Maybe a 600 and go 5 wide. Let me see what this looks like. If I sell a 600, go 5 wide. I don't love this trade. I'm just going to price it out. I mean, for a 5 wide, I'm only getting 50 cents. That's pretty crappy. I'd like to get like 20 to 30% of the width instead of 10. And then to the downside, 480. So 480. This, I mean, the put premium is just ridiculous. Look at this. I mean, on the call side, I guess I'm going up about $50, and on I'm going down $70 on the put side. I'm getting double the put premium. So that's 5 wide, and this put at 480. I mean, honestly, this could be a really good Jade Lizard, to be honest. So let me see. I'm going to tighten this up so that way, if at least I get it, if I get it wrong up here, let me just do this. Maybe I'll do a Jade Lizard 610. I mean, this what am I even getting for this trade? Next to nothing. I sell the 610. So if I'm dead wrong and price goes above 610, I'm going to lose 90 cents, which I don't want. So I almost would rather just sell a put. So question is, do I like this enough to take the trade? 470. I mean, if I'm going to say, well, I'm going after 385, I might as well move the strikes lower. I mean, I can get $3 at a 470. That would be about 10 points clear of the lows. This is only out 61 days. I don't mind taking this trade on my portfolio margin. This is going to shift my beta weighted delta. If the S&P goes down and the volatility goes up, I'm going to take on undefined risk here, which is not great. If I were to put in a spread, 470 by 450 by 440 by 430. I mean, I don't mind owning the underlying. I guess I can always roll it. My concern is that the VIX goes up. I mean, we're still at a 32.9. Let me see here. Who knows, man? Because if price goes sideways, I mean, 470 is down here. We'd have to claw at fresh lows, which means in the next 60 days, we would have to see the next 60 days, the market would have to drop another, 15%. Not saying that it can't happen, but I don't know. I'd rather sell puts. If price is falling, then I'd rather look at that exact same trade and sell when the VIX is higher and the IV rank and the SPY is higher, and I can sell way further out of the money. I can do a 10 delta, 15 delta, and probably trade in the low 400s. So anyway, I'm just kind of talking through it. I don't think I'm willing to take the trade right now, just in case if this happens, I'm going to be upside down immediately on that SPY trade. Even though I may not get assigned, I'm taking on, thousands of dollars of risk in that trade. So I don't really want to do that. But if we are dropping, then I'll go further out of the way, further out of the money, and still look at the same like 10 delta mechanics and try to sell some premium. So let's see. I mean, is it possible? And let's just talk big picture here. If this low is safe, high, low, I mean, we could have a bit of a wave pattern here where it's just a big wedge and the market doesn't really do anything. I mean, I don't know that. Like in hindsight, like, oh, we coulda, shoulda, woulda, but I just don't like selling premium if it's like right at the tops and bottoms. I also think that if we get a resolution with China, this market may find enough meaning to go up to highs again. And the last thing I want to do in my portfolio is be calling the top and have this market rip up here. Because, I mean, if anybody was exposed, how many of you, I'm just going to ask this, how many traders lost during April 9th rally? I would hope nobody did as far as like the overall shift in the portfolio. But if you are, not directionally trading or you're a zero DT trader, if you didn't catch that to the upside, if you were trying to sell premium that day, I mean, that move fortunately did happen later in the day. I mean, if you can zoom in on that hour, I think it was like 11 a.m. That was like a 12:30. I think it was a 1 p.m. rip. Let's go to like a 15-minute time frame. There's the move. So that candle is it's just ever 1 p.m. So this is why a lot of my premium trades and zero DTs are all done in the morning, because I eliminate a lot of that afternoon outlier stuff. But like I said, the last thing I want to do is I don't want to lose to the upside. That's the most frustrating thing as a trader, is when the market is going higher and all of a sudden you're rolling out of the way and you're getting in trouble. It's like, we don't know how aggressive this market can go if all of a sudden the world economy is like, hey, look, everything's better now, right? I mean, it was all damaged, yet a 20+% correction. Is this a V bottom? If this is a V-shaped market, that's I don't want to lose on that. But if this is a W pattern where we're going to come back down here and then have recovery, well, obviously I'd much rather trade some type of double bottom. And oftentimes this is the final day. This is the final day of the month. So take a look at the monthly candle. Okay, look at this on XSP. The chart's a little bit cleaner. Look at this monthly candle. This is one of the wilder candles I've seen. I actually have a screenshot of this. This is a textbook hanging man, and it's more of this. So that's actually no, hanging man star is a topping candle, but this is a potential bottoming candle. That's going to be a hammer. Now, usually, I would see this like that hammer is such a long wick to the south. I would almost say that it could be this if we have some follow through. But I'm more of the thoughts of, okay, we had our long wick to the south. We're coming back up here into the equilibrium of this correction. I think this market can still come back and retest somewhere in here to retest the wick or retest the low. And that would be that bottoming I'd really like to see. So I'm looking for some type of double bottom. I'm looking for some type of W. And I just think that the amount of volatility we saw through this year so far, this is to kick off the year. right? Here's January. We started in January down here. We got to all-time highs. We were up around 4% on the S&P, and then that thing peaked out and dropped peak to trough around 21.5%. Just the month of April alone, from high to low, April is down over 15%. Now, off the lows, we've obviously rallied back up. We're closing out today in the next 35 minutes at the month is going to be, up 14% from the lows. But we're still down in red on the month. That would make 3 losing months in the S&P, which you'll go back to a monthly time frame. That doesn't happen very often. We're definitely in more of a potential bear market environment. Correction. I mean, this was COVID, right? Correction, big correction, and then the next month was pretty bullish. Is May going to offer up that type of bullishness? I don't know. It could, I guess. But I think we did some pretty severe damage. I mean, breaking this low, falling to this previous resistance, becoming support. We're still below the 200 moving average. I keep coming back to that. We're still below the 200 moving average. Therefore, I'm not crazy bullish yet. Okay. And I could see this acting, even if we melt up a little bit higher, I could still see this acting as resistance. This would be a really good bull trap environment. If we get up to the previous highs from that 2-week pullback in March, we get up just above the 200 moving average, and then we close back below it. I do wonder if there's any type of follow through there. Maybe it's a gap fill. Maybe it's equal lows. Maybe it's a retest of the bottom. I don't know. Right? So this is why I have a lot of cash at the ready. This is why I'm waiting for better opportunities. If the market just melts up, I mean, I do have a positive tilted portfolio. I will benefit from a market melt up. I'm not going to be as aggressive. I mean, I would be getting some of my options to decay, and I'd take them all the way to expiration because I don't think that there's going to be as much risk with the probabilities. But I want to be ready for if this starts to turn bearish with some type of trap up here, that I have hedges that can pay me either to this area or to this area. And that to me is my next trade where my reward is greater than my risk, is the hedges that I put on for my crash insurance masterclass, the hedges I have running into August and October and December. Those hedges to me, like, they all pay 3 to 1, 4 to 1, 5 to 1, 10 to 1, 30 to 1, and they're there. And there's time, and I'm just going to wait them out. If we revisit the lows, I'm probably taking profit on a majority of those hedges. And that should help me, honestly, even come out positive if the market is down. So we'll see. But what are your thoughts? I asked this question all week. I'm still curious if I got some new traders that are following along. Are we going to revisit highs first? We're going to revisit lows first. What's the consensus? I've seen most people thinking retesting lows. And to me, technically, that makes sense. I think the pain trade truly is this. That's the pain trade. That is the pain trade, meaning nobody's ready for that. Right? Now, does that happen? I don't know. I think it's going to be a little bit more chop. I think we're going to go into this area, little indecision, some, lower highs and higher lows, and a lot of indecision until probably July. I mean, I don't know why the market would have a catalyst unless we resolve something with China. I don't know why the market's going to have really any catalyst. I don't think earnings are necessarily enough to keep the markets chugging higher. I really don't. I think the market is able to stay stable with earnings right now, but not necessarily justifying like, oh, look at this, S&P multiples are up to 25, 26, 27 times earnings. I don't think we're there. Okay. So I think it's going to be fairly sideways. I think the bulls are going to have a hard time going higher. But all it takes is, something bad. I don't know what the next catalyst is. Like, maybe the Fed surprises us with no cuts. I don't think that's a play because core PCE was down today. So core PCE, darn it. So this shows quarterly core PCE at 3.5. This is up off these recent lows. Let me go to core PCE month over month, annual change. There we go. That's what I'm looking for. So we're trending lower on the year over year, right? The Fed is still sitting at 4.25 to 4.5%. The Fed is still looking to cut for not May, but June. This is now a 93.8% chance that the Fed does nothing in May. That is only a week away. So we're next Wednesday talking about the Fed. Going into the probabilities here, They're still looking at about a 61.6% probability of cutting in June, and then a higher probability now of cutting in July, another higher probability of cutting in September. So we could potentially have 1, 2, 3 rate cuts by the Fed, and then another one in October, and then waiting until the end of the year. So 1, 2, 3, 4. That's all in a row, by the way. June, July, September, October. That's 4 Fed meetings in a row, and that could be 4 cuts to get us another 100 basis points lower on the official cash rate. Going into the next year, Q1 maybe 1 cut getting priced in for Q1, and then another one for summer. So the Fed is looking at anywhere between 100 to 150 basis points going into the end of 2026. And is that subject to change? I mean, I see a lot of I see a lot of this transparency that the Fed gets baked in and the market tends to run with it. I don't think the Fed necessarily wants to pivot. Like if the Fed pivots, is it going to have to be something that's reactionary? Case in point would be this. If the bond market does not go down, right? We're now, multiple days in a row here, 1, 2, 3, 4, 5 days in a row, lower on the 10-year. Like that is encouraging, right? I'm still watching this Liberation Day announcement. Are we going to get back to this level? And I'm hoping that we do. This is when the market was dumping down 20%, and we actually broke the 4 handle for a second. It was like 2 days, and then the market changed. But this was where the bond market effectively broke for the term. It was the basis trade. But if we just keep kind of going lower, 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 or there's more money flowing into bonds, like TLT is struggling, but the near term bonds, the 1 and 3 year, doing really well. This is actually pretty impressive. So we've got a 0.5% move, over half of 1% move in the 1 to 3 year bonds, and the 7 to 10 year point wise. Since the Liberation Day break, this is up around 3.5%. Same thing here. Since the Liberation Day break, it's up around 6% on the 20 year. So yields, 10 years going lower, 20 years still a little sticky, but the 2 year, 3 month, 3 month is down, 2 years down, 1 year is down. So the short-term rates are going way lower, which I think for this like liquidity air pocket, this big refinancing bubble that the U.S. is worried about. Short-term rates going down is helpful. It's the long-term rates that are going to be the potential sticky point. This isn't easy if we see the 10 and 20 year going higher. And so if we start to see the bond market yields going higher, the Fed is not going to be cutting rates like they're saying. I looked at the probabilities. We've got 4 cuts expected this year, another 2 expected for next year. That is 1.5% in lower rates. Okay. If this yield goes higher, they are not going to cut nearly as much. They might still cut, but they are not going to cut nearly as much. Because it basically shows that what the Fed is doing is not being priced in, and it's not trending with historical correlations like we've seen in the past with Fed cut cycles. Usually when the Fed cuts, the yields go down. So I don't know. It potentially is different this time. It was different here from September until it peaked in January. Clearly, the bond market is volatile and behaving awkwardly. So I just don't know. I don't know if we're going to settle in and that's an improvement, or do we get back to these levels here? I'm just not sure. So time will tell. That's the reality, is time will tell. China, U.S. not going to do anything first. If it's a standstill until July, it's like, okay. I don't know why China is going to have to cave in. I don't know why China is going to have any concessions to the U.S. I know that if U.S. companies start to leave China or start to do some semblance of onshoring, then yeah, maybe China feels a pinch a little bit, but I don't know. It's world number 1, world number 2. Like this is a major power play, and I don't know how anybody really benefits from this. I don't. Globalization is not a bad thing. I get it that there's some inadequate trade relations between the U.S. and the world, but the U.S. was like the stable backing, the security, the complacency. It's like it was the world's bank essentially. All that is changing right now, and that could have dire consequences if we're not careful. And I don't know how to fix it. I'm just trying to trade it. But I think it's silly, like the game of chicken that we're playing, when things could also get way, way, way worse. Way worse. Okay. All right. So yes, I do think bouncing around is a very a very probable thing. I just want to be kind of ready for anything. Like I said, I have probably another $500,000 to $600,000 in cash waiting on the sidelines. So it's been beneficial to take profit in here. If you watch any of my sessions for the last couple of months, once we got into these lows in April and we're selling premium, I said, look, if we pull back and fill some of these pockets and pull back to these levels, de-risk and de-leverage. That is exactly what I did. Okay. I don't know what this market wants to do. Are we going higher? Maybe. Are we going lower? Maybe. Are we going nowhere? All three of those could happen. I don't know which. I do know that if we melt up higher, that's easy to still make money in the markets. If the market goes sideways, well, I can trade that more intraday. I can trade that near term. If the market goes down, I can have some hedges pay and I can take better opportunities with higher volatility and another poke at the lows. And I'll take a stab at that. You know? So, I mean, in the middle of this no man's land, like I'm not going to be super active. I will do my daily profit play. I will do my um, I mean, waterfall might be a little bit tougher. That's one of my services I run for weekly swing trades. It might be a little tougher if I really don't have a sense of direction and we're going into lower volatility. But let me check one thing on term structure. We still have another 24 minutes before the close. My trade should be looking better. Butterfly, that one could be a full loss. Bear call up 73%. Bear call up 85%. Broken wing up 86%. So just going to let those should be safe to close out at expiration. So here's my call side stuff. We're trading at like, 3 deltas. So unless we have a wild 24 minutes to go, I don't think these trades are going to anywhere near at the money. So probably looking good for a $1.30 of or $1.75 of credit at the end of the day. Not bad. I'll take it. What was I saying? The sideways. I mean, yeah, I was just waterfall income. Like if I don't get the premiums that I want for volatility, I mean, look, if we settle all the way back down, and I don't know this, but if the VIX goes down into the teens again, it is very possible this market is trying to reach that 6,000 level, 6,100 level. But man, I would be ready for some type of volatility event again. That might be one of the largest crushes in volatility. It was the largest single day volatility crush we've ever seen in 30 years. I'm wondering if we get back down to these lows, that's one of the largest and fastest volatility crushes this market's ever seen. Maybe, maybe not. But we also might not go down, right? Why didn't they fill, Ed? Did you go up a couple cents? Like I'm in for some of those trades. Let's see here. Hood was filled at 51 cents. I mean, 52, 53 could still be a fill. Microsoft $1.30. Is it still possible you could fill it at $1.31, 32, 33? Meta 96 cents. I think that I'd be willing to take that trade up to $1. So Meta actually has a positive reward to risk. I can make 250 on the call side or put side, and I'm only risking 96 cents. Microsoft is a little bit lower reward to risk. I'm paying $1.30 for a 250 winner. The other one, Hood's it's about 50-50. It's almost 100%. I pay 51 cents to try to make 49 cents. Will I let the XPS? Yeah, I will. There's no assignment risk on SPX. So if price for the day is below this level, which is 55.65, if it's below this level, I get 75 cents on my broken wing. I get $1 on my bear call spreads, and then I'm going to lose 30 cents. I'm going to lose 30 cents on my butterfly spread. So net, I'll have group of trades here that gives me 175 in credit. I'll take away 30 cents, and I'm still up $1.45 on top of the 40 cents from this morning. So all in all, $1.85 per contract for the day. So it's pretty good. I mean, I was extremely patient. I was a little disappointed that we got faked out the way that we did. This would have been a really nice daily profit play in the morning for probably another 40, 50, 60 bucks, but it is what it is. But yeah, they can cash settle. And if price is going to do something here in the next 20 minutes, like try to get up to these, gap levels for the day, I do have profit traps there. And as we're coming into the close, that profit trap could also offer a bonus trap. So I don't think we're going there. I think we're calling it a day. This low, this high, we're probably going to settle back in. Nothing exciting in the next 20 minutes. But it's there if I need it, and I'm just going to let it cash settle. Because if it comes to the very end of the day and we're up to this level, this is where I have my profit traps. So that pays me potentially a $500 bonus trap. The butterfly spread pays me up to $1,400 bonus trap. But like I said, unlikely going to get filled on the bonus traps. I'll just take the credit that I initially took on the trade. Okay. Ed, what are they trading for right now? Let me go to Hood. So Hood's in for 51 cents. Right now it's trading. I mean, it's still right there, man. 50-cent debit, 51-cent debit. It's right there. So I'm 53 by 54, 43 by 42. The mid price is still 50 cents. I mean, it may be 51, 52 cents as a fill. You said Microsoft was the other one? Microsoft for $1.30. It's trading for cheaper, $1.26, $1.28. It should be able to get filled at $1.30. $45. Oh, okay. That's a big difference, man. That's above my ask price. Sorry about that. I mean, I don't look. It's okay if Microsoft goes up, it's still fine. I mean, we get above 402 to 405. This is still within an expected move. We're going out to Friday this week, so I'm not taking a bunch of time in this. And Microsoft is today. Today is Microsoft Meta, and tomorrow is Apple and Amazon. I'm gonna price in a couple more earnings trades for tomorrow. I'm gonna see if Apple, Amazon, and Airbnb are offering something. I tried to price out Reddit, didn't like it. Nothing else. So yeah, these three I'll try to price in tomorrow and see if I can find something. ExxonMobil, maybe. ExxonMobil, Chevron, maybe. I don't mind those actually for like different trades, not just an earnings play, but like a longer term trade. So I know the oil is dropping. I did get filled on a trade today. My CL futures trade got filled. So oil is down quite a bit. I did get filled on CL, and it was a fill for 15.15. So that is a trade that June 16th, 57, 56.50, 56.55. It is a trade that sets up for a $150 credit if price stays above 56 by expiration. I do have a profit trap on there. I mean, we could potentially drop straight down to $50, which I understand. But there's max loss, like it's defined risk. The most I can lose on this trade is $350. I have a profit trap potential to make $650, and I've got what hopefully is a fair credit of about $1.50. Okay, so that one did get filled. I don't know if I love this trade. I mean, we're talking Ivy rank at 88 because price is dropping hard. I almost feel like it'd be a better trade if I just took it from scratch. Let me look at this trade. I'm going to take another trade here. So let me go to 20, 49, 48 here. That's $70 income. That's $140 income. Like that trade has an 82% chance of profit. That's outside the expected move. That's an 18 delta. I think oil would bounce off those recent lows. I would hope at least. But let me see if I can take this trade. Let me see if this trade will fill for maybe 20 cents. I'll take another trade here. Actually, let's move these down. So interesting. That one's actually there's why. So $120 income, 84% chance of profit. High IV. I'll take a stab at this one. $60 income, less risk. $110 income. That one's okay. I'm gonna take this trade here if I can get filled. Let me try another. I'm gonna try 20 cents on this one for a pending order. Go to cancel on this one. So I'm looking at this. There's two ways I want to trade crude futures. If we come back down to the lows, then I'm looking for this to bounce back up. If that happens, my 1, 1, 1, 1 is going to be profitable. If it dips a little bit lower, I have that other 1, 1, 1, 1 that might also fill at 20 cents. So there's $150 of income here. There's $200 of income here. I'm looking to see if oil will bounce off those lows. So what is the deal with oil today? Weak U.S. data, price war fear. Okay, WTI 4-year low, weak. Saudi Arabia may want to boost output. I mean, I don't know. Maybe I just don't need to risk it. I'll take the trade and give it. I'll just step in there and take a trade, but I'm going to hold off on trying to be a hero and call the bottom on oil if we're going to have some bigger macro themes and supply and demand breakdown a little bit. Okay, all right. I'm going to turn my attention back to SPX here. We have 15 minutes for the close. Watching these levels. Still a low probability of getting up to fill this gap, but you never know. There could be like a little last minute surge here in the next 15 minutes. I've certainly seen the market do crazier things. This candle alone, by the way, this candle is like a 0.5% move just in 5 minutes. So is it possible that we do make a run of almost 1% by the close? I mean, anything is possible. So that gives me a butterfly trap. My strikes are still 55.60, 55.65 would be good. My call spread doesn't take on any risk until we're above 55.70. So hopefully we're okay. I had a member email me today. Hopefully Captain Al is doing okay on this one, but I think he's got a call spread in at 55.40. Hopefully that is not going to be threatened today. But that's why I tried to stay out of the way and get above this gap. So we will see. If it just comes up to revisit this noisy high and then falls off that, that's fine. Easy peasy on the profits. If it continues to go up and it's this like end of month melt up, well, we could try to fill the gap. There's a profit trap sitting right there with a broken wing butterfly. If I could get an extra $1 to $2 out of that today, I'd be happy with that. So let's find out. 14 minutes for the close. So now broken wing. So you can see because price is going higher, I was up about 80%. Now it's up 57%. I'm actually negative now in the bear call spread. I'm negative now in the bear call spread for now. I mean, price can still settle. And then the butterfly here is, I'm max loss is $30. So it's kind of down $30. That's the most I can lose. But if somehow this thing like shoots aggressively up to, I mean, I don't think that butterfly is going to pay because we'd have to rip all the way to 5,600. But trying to do the math on this. If I risked, that's a lot of risk here. I'd essentially walk away with maybe a couple $100 profit. If I win this butterfly, lose, I'm going to just make a couple $100. It'll be easier actually if price just stays below 55.60. That's a much easier win for the next 12 minutes. Nice, Larry. That's a good fill on Meta for 90. Microsoft 80-cent debit. Joey, I'm not in Microsoft for an 80-cent debit. I'm in for a $1.30 debit because I'm playing both sides of the trade. Okay, so I think for the next 12 minutes, let's just hang out here. This is a high that I'd be watching around 55.46. If we clear that high, we might still be destination gap fill, right? I do have a profit trap there. I will keep an eye on this. The last, this is crazy about the butterfly stuff. We've had a lot of these conversations during these final hour sessions. Butterfly spreads, they have that potential for the profit traps. The final, 15 minutes of trading, the final 10 minutes of trading, the final 5 minutes of trading. Obviously, I can let it cash settle. That's just really tricky to know. Like it's going to close like right at 55.65. I would love to see that happen. I don't know if it's going to. But I will be watching as we're only now, about 20 points away from my profit trap. So let's take a look at the broken wing. So 75 cents is my broken wing credit. It's not showing a profit trap yet. If I do the analysis here, I got all this crap going on, but there's my trade. Hard to see. Move this up a little bit. So right now, there's my butterfly profit trap on the broken wing. Anything greater than 55.75 is taking on some risk. So it's a cluster of trades, that's for sure. But in real time, this is what I'm after. Oh boy. Oh boy. This market's trying something end of day. 55.51. Look at this piece of crap. End of month 10-minute BS. I mean, I swear, if this rips up here and closes greater than 55.70, I'm actually going to be kind of mad. Like, look at this market the last few minutes. 5, 10, 15, the last 15 minutes, this market is up 0.62%. Like, this is, I mean, end-of-day stuff is so, it's so sensitive in a zero TZ environment. I mean, I have traders that tell me all the time, like, oh, iron butterflies, you can pin. Yeah, but this is what happens at the end of the day. You can't pin that price. I mean, I've got 10 minutes left. What the hell is this thing doing? So, I mean, are we going to find the gap, check the box, and the market rejects off that? Maybe. I mean, I think it'd be silly for this market to go. And again, just talking about some wild and crazy volatility, this market was down over 2.28% from the close yesterday to the low today, and it is right back up 2.38%. So we had over a 4% move intraday, 2% down, 2+% up. It's crazy stuff. Okay. XSP, like those trades should be fine. This waterfall trade, we're starting to see some profit here. This is out another couple weeks. It's okay. XSP, this trade's okay. It's break even. I'm still going to let it settle in, but I'm just going to watch. Okay. I'm not quite seeing a profit trap yet. 65, we're at 50. You piece of shit. 55, 63. Oh my God. I mean, I don't know. I might surprise myself with a 5,600 squeeze. Are you freaking kidding me, man? Look at this butterfly. This trade right here might start to squeeze in a big way. Chart alarm just went off at 55.65. So this price I'm going to be watching carefully. Bear call spread is taking some heat, but 75 is my strike. 55.70, that's my strike. Good Lord. End of month shenanigans. My broken wing. Come on, man. Like, it's 8 minutes before the close. I'm not seeing any profit trap. This is brutal. And we're above the gap. The gap was 55.59. We're above it. Freaking markets. Well, let's see how it settles in the next 8 minutes. I mean, this is so crazy. This market is up 1% in 20 minutes. To claw back and show like, hey, it's green on the day, but it's just, what the hell? Unfreaking real. Well, butterflies where it's at, I guess. If this isn't going to fade off this gap, then butterfly is my best friend. I got to see this thing rip up there. It's up 200%. Come on. This is insane. 7 minutes to go. Is there any fade to this move whatsoever? Come on, there's got to be a fade to this move. There's no news. It's just this is end of month squeeze. There's nothing happening here. Like this is end of month positioning. This is option flows. This is heavy, behind the scenes crap. So we'll find out. Where's the resistance? Right there. Where's the gap? Right there. Do we fade off this at all? Very possible in the next 6 minutes. We're going to find out. But there's a lot of stuff that happens end of the day, and this is why I keep telling traders my especially day trading, it's like you got to be careful on this afternoon stuff because the market will do nonsense like this, and it does make it very challenging. Calling tops, calling bottoms can be very, very risky. So we're trading at 60. Like I'm still in a technical profit trap right here with my butterfly, but it's showing that I'm upside down. I'm actually in a $3 profit trap right now, but I won't know that until this market closes in 6 minutes. So realistically, I either get really lucky on the close at 4 p.m. or I see this market fade. I see this market fade off of this run. So having this rip up over 1% in 20 minutes, 1.12% in 3 candles. Nuck and Futs. Okay, we'll see how it plays out. Not done yet, but taking on heat, butterfly here. I mean, are we going to squeeze all the way to 5,600? If so, then that thing pays really well, but my God, that'd be lucky. And I don't trade butterflies to get lucky. It's like I'm trying to trade them mechanically, low risk, low risk, high reward. But I mean, I know that my strike is 5,600. So we got to squeeze another 26 points in 5 minutes, and this thing can pay out, $1,500. But I'd rather it stick around this. Jesus, this broke wing butterflies now. It's upside down. You gotta be freaking kidding me, dude. So stupid. Four minutes to go. I need this thing to drop 10 points. We'll see. That is really crazy. %1.23%. We have gone up over, and I literally look at this and I'm like, I don't think the market's going to go up 3% today. It's up 2.27 off the lows with a VIX that's not that high. Ridiculous. All right, let's see if in 4 minutes this thing fades hard. Yeah, they should. Based on the 4 o'clock closing price, that's when things will settle. So yes, it should be a 4 o'clock settlement. So if I can get below 55.70, I'm not taking on any heat from my bear calls. This butterfly spread is still at a loss right now. This broken wing, we'll see. Gosh, this is ridiculous. Talk about the final hour, final minutes. Stupid stuff. All right, get below 55.70. Just do me a little favor, would you? 55.70. 55.65. Just set a couple chart alarms and see here in literally the final 3 minutes. This reminds me of a little bit like the holiday market when we had some crazy, stupid stuff happening all day. The market just wouldn't stop going up. That was post FOMC on December 18th. 2 minutes left. Come on, man. This price feed isn't even moving. I've got a 55.72. It's like my broker feed stopped. All right, 570, 55.70 got hit. 2 minutes left. Let's go. Fade down. Go red. Somehow reward me for a 55.65. Let this thing settle in. Give me a broken wing trap for $500 and let me get the hell out of this trade in 2 minutes. Come on. Stop that. Wow. I mean, this is crazy price action. This is a risk you take at the end of the day. 1.27% rip in 20 minutes. Come on, close down below 55.70. All right, we got 27 seconds. So I can do the math on how this thing all settles out. I mean, ideally for me is less than, there we go, 569, 568. Let's go. Settle in at 565. Let's go. Closing bell. Oh, man. Okay. All right. This is going to be really interesting how this thing actually settles in Tasty. Okay, I'm looking at my platform. So 568. I'm going to do the math on this whole thing. There's a broken wing that closes for $442. My bear call spread finishes for full profit. This is the closing price. This is so stupid. All right, so I got a broken wing butterfly trap for $442. Bear call spread will settle for a full 34 cents. Bear call spread for settle for a full 26 cents. I lose 10 cents on the butterfly. Net positive on the day with that settlement. I will confirm this. Should be a T+1. So by tomorrow, end of day, I should see how this whole thing settles in my history. I'm going to take a screenshot of this. I'm going to have some evidence because I will fight the trade desk on this if they somehow like, oh, no, we settled it here. Like, no, you didn't. I'm looking at real price. This thing closes at close was 5563 according to this candle. So I'm taking a screenshot. And just like that, I thought I was screwed there for a second. It looks like it actually came out okay. Silly, silly nonsense. Okay, well, here's the math on that. So the 5560 buy call and the 5565 sell call and the 5590 buy call, I pulled in 75 cents credit. Now, the way that trade works is I have from 5560 to 5. Well, here's the numbers. If I go to 61, that's plus an extra dollar. 5562. So if it was 5561, I'd have $1 plus the 75-cent credit. Okay. 5562, I'd have $2 plus the 75 cents credit. So you can see I'm going with this. So 5563, $3 plus 0.75, $4, $5 plus 75, 5566 would be this would be $4 again. $4 because this is the right side of the triangle, right? So this is the credit was 75 cents. There's the profit trap that goes up to $5. There's the decline that still has 1, 2, 3, 4, 5, right? So I still have bonus traps here. $4 plus 0.75. This would be $3 plus 0.75. 5568 would be $2 plus 0.75. 5569 would be $1 plus 0.75. Okay, and if we had the 5570, that would effectively be kind of back to 0.75 or break even. Right, so this shows a cash settle close on the day. I was seeing 5568. So I'm seeing a little fluctuation here. But I mean, 5568, 5569, there's still a trap there. It depends on what they put on for the 4 p.m. close. This candle closed at 560. That closes a 5563. So that should be a $3 trap with the 75 cents and staying below. This is so crazy. Yeah, we'll see. Tasty support is set by 4 p.m. So options can close, but I mean, you shouldn't be subject to like the aftermarket. That could be a per broker thing, but Tasty said by 4 p.m. things settle. So based on that closing price, I will verify all this stuff tomorrow. I'm going to take this whole list of trades and see like, okay, what did my April 30th trades do? How do they settle? And I'm looking for that particular day and see what the net result is. So I'll see what this looks like tomorrow. Yep. So I'm showing a 556907 right now. This candle closed at 5563.06. So it could be a little aftermarket nonsense, but we'll see. But The ideal situation, and this again, this is like stupid risky. I don't know why this was. I mean, you look at what happened. This was a very improbable move, and yet it happened. Like, I don't know what that was standard deviation wise for what was expected in the last 20, 30 minutes of trading, but it was probably like a 3, 4, 5 times expected move, maybe more. I mean, that's nonsense price action in the last 20 minutes of trading. So anyway, I still have 55.70. If it's less than 55.70, I still have $1 on 2 bear call spreads. And then I have the 75 cents plus bonus trap on Broken Wing Butterfly. And then I lost 30 cents loser on the 5600 Butterfly. So the way this all settles in, this is why I'm going to watch it carefully as far as how the price gets settled, is there should still be a bonus trap in here. And if we're below 55.70, then I still win on my 2 bear call spreads and the bonus trap with a Broken Wing, and I'll take the 30-cent loss. So if we're talking about a 5569, well, I'm still going to get about a $100 bonus trap plus the 75 cents and another $1 on the credit spreads. I can eat that 30-cent loser. Whew, we'll see. That was way more exciting than I wanted it to be. But I'm going to take a screenshot here and just have some evidence to go to bat with if I need it. So I've got broker platform at 5568.92 after the close, close candle, and close candle that I'll discuss if I need to and pull that out with the trading team. Okay, but I'm showing here 5569.06 is the closing price. So that should still offer me at least a $1 profit trap. All right, well, let's not do that again, shall we? All right, way more exciting than I wanted it to be. I feel, obviously a lot happier that this has a chance to settle in for some bonus profit instead of being up here when I would have lost on everything, and the 5600 was worthless, which would have made me even more mad. Because then up here, this is like, well, that's worst case scenario. It's above all my levels. I lose on the call spreads, lose on the Broken Wing Butterfly, and don't even get my, my butterfly trade to pay out anything because it didn't quite get into that window. So, what's the moral of the story here, traders? This is why afternoons and into the close can be so freaking tricky. This is the gamma risk. This is the outlier risk. This is the nonsense the markets can do sometimes. And we've seen a lot of this. Look at this day. This day was down over 2.2%. Okay. And then came fighting back. And certainly the last 20 minutes, like ridiculous. 2.3% from close yesterday to low today. And then we rip all the way back up here, 2.7%. A 5% intraday swing. Lance just said that someone leaked Microsoft earnings for the bell. Okay. I mean, Microsoft alone, though, shouldn't be able to give the SPX a 1.25% bump, though. It's not. Well, I guess I take that back. It is like top 3. So, yeah, I mean, NVIDIA, Apple, Microsoft, they have the potential to do that. Does that mean Microsoft is up? 416. There we go. What's my trade on Microsoft? I need it above 405. Cool. I mean, we should be able to see some profit on that tomorrow if it holds. That's a big boost. Mag 7 can give this market another surge to the upside. All right, good stuff, Larry. All right, I'll let you go. I'm going to check this out tomorrow and see how this whole thing settled in. Right now, per SPX 5569.06, and we'll see how this settles. It says for the day, and this is probably subject to change, but it says $420 on the day. And a lot of that's Broken Wing Butterfly plus credit spread. I lost on the Butterfly. Waterfall still running for the next week or so until I see that thing turn green. But any push to the upside, we've got more waterfall trades looking good for profit. So, all right, the saga continues. And also for my daily profit play, because I have those trades 854, 855, 856, I'm not going to close those trades out yet because I want to make sure that they truly did settle with a win. I think they should be fine, but I'm going to confirm that tomorrow. How would you know the figures are accurate? Well, I mean, based on the price, I know exactly what I should get. If this is the strike, if this is the price that the market closed at, look, I am below 570. My call is 570. We closed at 55.69. I could be at 5569.99 and I can still take it 100% premium of what I put in the trade. 5575, same thing here. I could be at 5574.99 and I can still win that trade all the way to close. So per this should be a winner, this should be a winner, and this should be a winner with a profit trap. And this butterfly is my only losing trade for 30 cents. I did 3 contracts, so it's 10 cents debit times 30 or times 3, so 30 cents loser. But all in all, I should be seeing something close to this: $1.75 and 34 and 26. That should be the net result on the day, plus the other 40 cents I pulled from the broken wing, minus 30 cents here. So my calculation should be this: 175 plus 34 plus 26 plus 40 minus 30. I should have $245 on the day for SPX. That's what I'm going to look and go back into the history and see if that's what it sells for. Okay. And next time, let's just not call a top and bottom. I literally said that today in Telegram. So I almost had a very expensive lesson to learn, right? Okay, where is, I got a chart on at 558. That was late and lagging. Where did I say here? Daily profit play. I'm seeing the 5,600 liquidity level. I don't want to call the top for the day. Well, I tried to and almost got beat up really badly for it. So fortunately, seems like it came out okay, but I'll verify that. Yeah, and I'll go in if I have to. I'll call the trade desk, and we'll get into the details of how this thing closes. But that's what I'm seeing. Closing price 5569. All right, thanks everybody. Have a good rest of the day. That was way too much drama. I'll see you tomorrow. Thanks. Bye.